No, that's very true. The corporate tenants have the idea or the track record that the landlord will give them what's called a gigantic tenant improvement allowance. So they might give them $20 per square foot or maybe $50 a square foot up front to put in these fixtures and equipment and TIs that they need to get their property up to speed. Now, the one thing you have to be very careful with some of these national tenants is that they will have what's called a termination clause, which means down the road, if that particular location, say a Starbucks location, is not performing, they can basically bail out on that lease for very little cost.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Bruce Bean, is a commercial investor in the San Mateo, California area, and he's with the Trafton Group. They do commercial leasing sales in the Bay Area and investment sales. He's also the host of the SF Commercial Property Conversation podcast. Bruce, welcome to the show.
Thank you very much for having me, Dylan. It's great to be here. I look forward to speaking with you.
We were talking before the show here, Bruce, about the space that you're involved in, the segment in the commercial space, commercial leasing in particular in the Bay Area. And I was mentioning to you that I'm a fish out of water in this space. I've spoken with investors from multiple different segments of commercial, but none who are doing the leasing aspect specifically. So when we talk about leasing, especially in the commercial space, this can encompass such a wide array of deal structures and segments. What's some of the areas that you've been involved in the leasing space specifically?
So just to give you a little history here, I came out of Colorado, actually Boulder, Denver area. 35 years ago, we moved to San Francisco, and I decided at that time to move from being in architecture and design to being in commercial real estate. And I went to work for what was then called the Rubicon Group, which was a commercial leasing, office leasing, and sales group, a small boutique group based in San Francisco. So at any rate, I kind of cut my teeth on office leasing in what's called the San Mateo area, which is below San Francisco in what's called the Peninsula. And I learned about office leasing at that time, and we went through a lot of listings and represented a lot of owners to lease out their spaces for office buildings. But then I segued from the Rubicon Group. The Rubicon Group transitioned and merged into TRI. TRI closed their Mid-Peninsula office, and so I went with Cushman and Wakefield and continued down the road of leasing. I actually started out leasing industrial space, which is an interesting kind of genre all on its own, but I was doing kind of industrial and office leasing at that time. And then eventually I kind of moved into doing what is now called retail leasing. So I've kind of covered all the segments of commercial leasing in terms of
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Industrial and office and retail. We also have worked with multifamily. We have a 22-unit multifamily project that we manage right now, and so I'm familiar with actually residential leasing on that side also. But at any rate, through the years, I've kind of gone through the whole segment, and as part of that, I've done a fair amount of investment sales. Both there's kind of three segments to investment sales. There's the multifamily section, but there's also what we call user sales. I currently have a $12 million property down in Redwood Shores that I'm going to meet with a user today to potentially purchase that property later on this afternoon. So at any rate, leasing, if we want to go back to leasing, that's an interesting segment and one that maybe you have some questions about.
Yeah, I think when we talk about the scope of all this, right? So industrial, I know right now seems to be booming on all fronts. Investors are interested in it, and from what I understand, this is like the biggest part of the year for the industrial space with the holidays. Someone who's in the space recently on the show explained to me a lot of this is being driven by people needing a place to store goods for, an Amazon warehouse and this type of thing. People need warehouse space when everything is being bought online, which never occurred to me. I was thinking industrial would be for another aspect, another reason, but a big part of it is, you're needing a place to store goods if you're going to be buying everything online. But then you've also got so many other segments, which you mentioned, multifamily, you have retail, right? And so I've often thought, well, how do those transactions work? Because you have an investor who maybe owns the building. Do they then have like a prior relationship with, let's say, a retailer or a brand, and then they'll come in? And do they broker it themselves? And how often would they reach out to someone like yourself to broker that deal for them?
No, typically, I would say probably 95% of the industrial market is represented by real estate brokers or real estate agents. So there's a small segment of people that think they can represent their own buildings and so forth. But as you say, there is a huge drive right now to fill those industrial buildings with people that are providing goods to people. Now, there was a little hiccup in that the tariffs kind of slowed down that growth, and there was a pause in that, but I think that is now coming back to some degree. And so that's all kind of transitioning. The very hottest market right now is actually retail, which you wouldn't really expect, but retail is very hot right now. People are kind of clamoring to find retail space. I have retail space in downtown San Mateo, which is south of San Francisco, and I have 4 or 5 different groups trying to lease the same space. So it's a very hot market. The big box retailers are a little slow right now. Some of them have gone out, and then the drugstores and so forth have kind of backed off from their expansion. So there's some glitches in the retail area, but in general, retail is very hot. And then industrial is sort of the second market that's hot. And then if you go to office space is kind of, well, as you probably well know, has had some very high vacancies, but that's starting to come back also.
Now, in retail, does this encompass as well restaurants as well? Is that a different segment when we talk about retail?
Well, it is a different segment to some degree, because a restaurant requires probably at minimum of $250,000 in investment in the equipment.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And the fans and the ovens and the refrigeration and so forth, that's sort of a different genre, so to speak. We do have a 4,000 square foot restaurant for lease right now in Daly City, but we have had a lot of activity on that particular project. There are a lot of people out there looking for existing restaurant space so they don't have to invest quite as much money in kind of ground up installation of all their equipment and so forth. So yes, that is to some degree a separate segment, but it is also part of kind of the retail group.
Now, I've heard this before, that when you're going after a national, corporatized retailer, a Chipotle, a Starbucks, right? The plus side is these are very good tenants that are, going to be able to pay on time and pay, high rents. But you do have to have the space really up to their standard. They're not going to take it like as is in most cases. So that's oftentimes why you might see, in a prime real estate area, maybe a non-corporate, non-national tenant there, because they took it as is.
No, that's very true. The corporate tenants have the idea or the track record that the landlord will give them what's called a gigantic tenant improvement allowance. So they might give them $20 per square foot or maybe $50 a square foot up front to put in these fixtures and equipment and TIs that they need to get their property up to speed. Now, the one thing you have to be very careful with some of these national tenants is that they will have what's called a termination clause, which means down the road, if that particular location, say a Starbucks location, is not performing, they can basically bail out on that lease for very little cost. So even though you get this great national tenant, it may have some caveats in there for actually getting out of the lease. So you have to be very careful. And then there's a whole genre of investors that want to buy these particular properties that are McDonald's or Burger King's or Starbucks, that these are called triple net leases, where you basically buy the building and you get a steady income from that building, and the tenant takes care of the building, all the expenses and maintenance and so forth. So it's a great investment if you want sort of a passive investment approach.
When we talk about areas of real estate where folks immediately jump to when you think about like being a realtor, right, or someone who is involved in transactional real estate, right? People will jump to single family, they might jump to multifamily, but commercial leasing is a segment which I think a lot of folks may be blind to, because they haven't had these conversations. But when you're seeing an increased demand for industrial space, when you're seeing, as you mentioned, an increased demand for retail, I think that there is an opportunity for maybe some folks to come into the space. You may see some migration from some other spaces as well, right?
No, I think that's very true. That typically for someone coming into real estate or investing in real estate, they might start out with a single family and start flipping single families, and maybe go to duplexes and fourplexes and so forth, and then maybe move up to larger apartment buildings. And that's sort of a trend in the investment world. But there is a whole different segment out there where you could invest in, say, a triple net lease. You don't have nearly as many management headaches as you might have with a multifamily property that's a fourplex or larger. So it just kind of depends on what your inclination is and where you want to put your money and so forth.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
But that is certainly an area to look at that may be different from the kind of standard approach to investing in multifamily.
I want to ask you specifically about investor relations. As someone who comes from the single family space, I'm used to, finding investors for maybe a single subject property, right? But then when you're talking about commercial properties, these are, funds, right? And these are people that have syndications. And so as someone, if you could give advice to other folks in the leasing space, how would someone who may be newer to the space go about finding a commercial space to represent, to lease out?
So, okay, so you're talking about, say you've got some money, you want to invest in a commercial space, maybe you are not inclined to invest in a multifamily approach, and so maybe you want to find something else that's a little bit hopefully easier than managing a triple net or managing a multifamily. So there are a bunch of people out there that specialize in selling what's called triple nets. At the highest level, there are these publicly available REITs, which are investment groups that are at the public level. At the lower level, there are syndications that specialize in, say, triple net leases and so forth, or commercial leases or industrial leases. And so you could kind of get into that particular area if you start searching around the internet and find people that are specializing in these particular products that are not necessarily multifamily. I mean, you might find a particular group that specializes in that area, and then you can kind of go from there and find how much they want. Typically, they have to invest maybe $50,000 or $100,000 to get started, and then you're going to put your money into that investment just like you would with a multifamily, and hope to get your money back out in 5 to 7 years.
I've spoken with so many people in the commercial space, I'd say over the last 5 years or so, have either been on the side of patience, or they've been on the side of we bought too deep, right? And it seems like there's a lot of people who bought way too deep around 2020, right? And you have these ARM rate loans that have doubled, in many cases more than that. And then you've got the cost of materials, you've got increased uncertainty in the market, but then you've also got stabilized or decreased rents. So then the properties aren't appreciating to where people thought they were. So now I've seen some level of distress in the commercial space when it comes to specifically like multifamily syndication, which has shown me that there's an opportunity for investors, right? When there is some level of distress in some of these markets, there's an opportunity for someone to come in and either make a creative offer or do some type of value add there, because there's distress on the operator side. But with that said, Bruce, we are actually coming up on time here on the show. Any projects that you're working on, or how can our audience reach out to you or your team?
So the Trafton Group, you can look at our website, trafton.com, thetraftongroup.com. And you can find me there. You can see what properties are available. If you happen to be on what's called CoStar or LoopNet, you can find our properties there. I do have this $12 million property in Redwood Shores that's available for purchase. If anybody wants to get into that type of investment, I'd be happy to talk to them. But, out there, if they just in general want to talk about commercial leasing or industrial leasing or retail leasing or even office leasing, I'm happy to speak with them. Please give me a call at 650-888-6792. And I look forward to talking to you again, Dylan. This is a very good conversation, and I love to have more conversations with you.
Bruce, thank you for your time. Thanks for coming on the show.
Thank you.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.